This is Alan Bush with the Financial Futures Forecast for Tuesday, March 24th. Starting out with the stock index futures, we are seeing prices a little bit better this morning. Some support from a Fed Bank president indicating, in his opinion, that the U.S. economy will grow by 3% this year. Also, we had some better economic numbers out of the Eurozone. And then in the U.S., we had an improved new home sales report. Also, we had inflation coming in a little bit higher than expected as far as the CPI, excluding food and energy. So overall, somewhat better than expected economic numbers here in the U.S. and also overseas, which supported stock index futures. Longer term, we continue to believe that the main trend is higher. And I think this is a trend that will last for quite a few months. Now, moving over into the currency markets, we are seeing the dollar index under some pressure again, with the greenback suffering some ill effects still from the Federal Open Market Committee meeting statement that was released last Wednesday, indicating that the Fed is likely to delay a rate increase. Also seeing better prices for the euro currency after economic numbers in the Eurozone and in Germany as well coming in better than anticipated. So there appears to be a better tone to recent economic data out of the Eurozone, suggesting there is a possibility that the Eurozone economy is turning the corner now. So European currencies advancing on better economic numbers. One exception, though, is the British pound, which is a little bit weaker. We had inflation numbers in the UK coming in basically at zero, and that is a bit of a surprise. So this is likely to delay a rate increase from the Bank of England. In fact, I don't think that the Bank of England can raise rates at all. Now, moving over into the interest rate markets, we are seeing futures higher. Now, futures could have reacted to the bearish Eurozone economic data or to the better than expected economic data here in the U.S. and some of the inflation numbers, which still continue to show a rather stable inflation outlook. So futures higher, even though we did have some bullish news, some bearish news. So anytime futures can advance on bullish news while ignoring the bearish news, that has to be viewed as a sign of strength. And that definitely is the case, I believe, for the treasuries today, with the 10-year and the 30-year issues trading higher this morning. So the bull market still appears to be intact, especially at the long end of the curve. And we continue to believe that the Fed will not be in a position to raise interest rates anytime soon. If they do raise rates, which I'd have to say if, it could be not until 2016. So the long-term trend on the long end of the curve still appears to be higher. Also, we are looking for the Fed, as far as what is expected from various analysts, as far as when the Fed could raise rates. The consensus view, from what we gather, is September, which, once again, we totally do not agree with that early rate increase. So have a good trading day. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.